Hello ladies and gentlemen, and welcome back. Well, it's time again for us to all take a look at the biggest market in the world, the S&P 500. Why? It's earnings week, and Microsoft and Google are about to kick off the biggest earnings that we see every quarter in the US, but this time it's a little bit different. It really matters. Will the markets be able to rally to a key point, 4,100, where the 20 moving average and pivots combine, a very, very big zone for potentially a bull trap in the future? Or will the markets fall all the way back down? Well, in today's video, we take a look at how earnings has been going so far, some of the macro environment indicators that are telling us some extra things about the markets, and of course, your favorites, including stocks, commodities, and cryptos. See you soon, everybody. This will be a great one. Well, welcome back everybody to the Daily Show, where we talk about all the markets around the world. If you like anything to do with markets, why not consider subscribing and of course smash that like button. We'll begin here by talking about Walmart. So it was pretty disappointing, and often Walmart kind of leads into a dire warning for the rest of the economy. Let's have a look here at the stats of what happens when Walmart gaps down over 5% and what happens after that period of time. Well, here are some interesting ones. We've got the next weeks and months after this occurs. Now, you'll notice it's fairly choppy. In fact, the statistics would say that most of the time, the next 6 months are incredibly good for potentially the trader and less good for the investor. Notice the S&P 500 only is 54% positive. That's very low considering the average over time after 6 months after a bad Walmart earnings. So it does spell realistically a lot of volatility moving forward. And while the first week is usually positive by the stats, it really doesn't figure itself out for quite some time. Now, how could this counteract, or how could this work with the current market that we're in? Well, of course, we're in a midterm election year. We know midterm elections create a lot of volatility in markets, and that volatility tends to start in August into September into October. Do remember, September is theoretically the worst month of the year for the S&P 500 over recorded history. October doesn't fare well for the beginning, and then usually things start to turn around back of October into November, December. Will this year be any different? Every other year has been fairly similar. We've got inversion going on everywhere as we spoke about it. FOMC and of course the Fed rate coming out this Wednesday. We'll find out whether they're going to go the 100 basis points, which some people are expecting. And if they do go and really push this interest rate right back up, we'll probably be getting close to 50% yield inversion very soon. So we'll continue to update you here, because remember, unfortunately, this indicator has a 100% track record of the recorded history we've got here of reporting and kind of predicting forward recessions in the US. Let's talk about bottoming processes. Everyone's discussing this earnings season, and many people are convinced that the low is in. Maybe it is. I just think that we need to follow the price action for now, because as we saw with that Walmart stat and even the midterm election stat, there's more likelihood of higher volatility to come. And it's unlikely, if this is the low, let's say from the Nasdaq side, that we're not going to have a secondary dip later on. So feeling FOMO right now is probably one of the worst decisions that many traders and investors can make. Dot-com boom, we saw, of course, the Nasdaq bottom off first. GFC, we saw the Nasdaq bottom off first. Why? Because growth tends to outperform in these types of periods. Remember, growth comes out first. Consumer discretionary comes out first. They are often beaten earliest in these type of recessions, and they come out first, and usually the market will rotate into them. So we'll continue to watch that story as it plays out. Q2 earnings beat data so far, 69% of the time we're seeing beats 199, misses 90. This is actually going up. So as the earnings season's coming through, we started with like a 65% beat rate. We're now at 69. This is pretty normal. Around 70 to 76% at this time of the earnings cycle is where we expect to be. And it shows that maybe the dents in the economy might come in the next earnings. In fact, I think that's probably where the bigger problems are going to lie. We'll have to find out whether Wall Street is already pricing that in. And we've got some good ways of figuring that out with today's video, which we'll discuss very soon. Alphabet, Microsoft, they're the big ones after the close on Tuesday. Then we have Meta and Shopify on the Wednesday. And of course, Thursday, all eyes will be on really Apple and Amazon to see whether the consumer discretionary side can continue to hold up. I would say that the earnings results should be okay for most of these. maybe Alphabet is the questionable one. If we're talking about implied volatility, Meta is the highest. Options implied volatility is over 12% on Meta. We have Apple sitting at about 5 and a bit percent. Amazon's about 7. Alphabet's about 7, and Microsoft is about 6. So basically, we're expecting an average move of around 5 to 7% for most of these stocks moving into the days. If you're a trader, you need to be prepared for that because, of course, after the close, if you don't have access to trading all the time, it can be quite volatile and gap you. So be careful out there for anyone that hasn't experienced earnings season before. How was the Monday session? Well, frankly, pretty boring. The market sold off early. The short time frame downtrend is still intact. So what we mean by that is the 15-minute and 5-minute time frames are starting to still weaken, and that shows us that there's a little bit of weakness there leading into these earnings. We saw, of course, really more of a chop, bit of recovery through the day, sell off into the close, and then some pickup. And the pickup's probably the most important thing. The sectors, though, were interesting, and many of you out there were already focused on these sectors. Copper, metals, oils, they did the best for the session, and they've had a couple of nice sessions on them now, especially metals. I think metals have been underappreciated recently, where copper, iron ore, a few charts we'll look at in today's video, fell off really heavily, and then they went straight into support zones that we'll be looking at the charts. With earnings coming, of course, we know Google and Microsoft are coming out, and it's a great time for us to thank the sponsor of today's video, which is Tiger Brokers. You'll see here the platform. We've got Google, and I thought we'd do some quick analysis here. Notice that before the earnings, Google is at a level of support. Basically, we're in a massive channel. We have potentially a max pain, which is over here, which is a low that was formed back in the late May. And if the market likes what it sees, it could easily rally back up to this $120 target. Of course, this is where a lot of that volatility comes in. What you need to be careful of with Alphabet or Google or any of these stocks at the moment is falling through the lows. So there's going to be a lot of volatility here on Google. You notice that the market is not coming in with high expectations, but that doesn't necessarily mean that it's just going to rip up. I would say Google is the best of the stocks against TikTok at the moment, but remember, Meta, Snap, any other social media, TikTok is currently really taking a massive effect on these. And I still think that Google should do well, and ads hopefully are in target. If we want to also look at the social media platforms and just the data around them, Tiger Trade offers a whole bunch of things such as target prices, high lows, mean prices as well of all of the big kind of investment houses. You'll notice that at the moment they've slowly been reducing their buy ratings to 39. So this is just, again, the expectation leading in. And I really like another feature that's here, which is the current stock performance versus the SP 500. Great to have so much data. Tiger Brokers are always improving their platform. If you're interested in one of their special offers, look at the link in the description down below. And of course, make sure you have an economic calendar ready, and Tiger Brokers does have one with all of the big announcements coming out, and you can select the countries that you're looking for. So let's get started by talking about the VIX in terms of the charts. The Volatility Index, or often known as the Fear Index, it fell through the 24 last week. And at that point, usually the statistics have kind of been towards the VIX falling this year towards the 20. So will that happen again? At this stage, it looks like it's online. Now, if that happens, of course, what do you expect the stock market to do? Potentially move forward. And we are looking for that 20 moving average on the weekly, the mean reversion. Another big indicator and more of a lead indicator is going to be the US dollar. Now, US dollar changed for us up here. We made a higher high or a higher peak. We effectively breached past and closed below this last trough over here. And that began a weakness in the US dollar. Now, if weakness is happening in the US dollar, for anyone that doesn't know, basically if money's coming out of the US dollar, where's it going? Well, it's most likely going into things like the stocks. It's going into bonds, it's going into emerging markets, and effectively just risk on. Think of it as the US dollar is the best hedge in the market right now, and it's pretty much getting one of the only ones, because things like gold and things like Japanese yen and even CHF haven't been performing so well in 2022. Everyone wants US dollars. Now, the market has fallen to a point where it's testing this support. Notice the series of lower highs coming through. There is clear weakness here on this chart. If it continues to fall through take a look at this on the daily. Here's the daily. Here's the current wicks. You'll notice the long leg doji followed by another long leg doji, which kind of shows us equilibrium of the orders or potentially indecision. If the market does close below here, where's the next stop? Well, it's all the way potentially down at a 104 or even lower. And this has got to do with mean reversion. Again, the 20 moving average is sitting right here right now, and even the trend line is sitting here right now. So there's so much big level stuff going on the DXY. If you are a bull in the markets, you want this to cover and basically break underneath this zone and start to move towards the downside. So be watching the dollar index. If it's going down and the stocks are going up, that's probably a bit of a tick in terms of the movement so far, and you might be able to expect a little bit more out of it. Now, a lot of people have been placing bets on metals, and copper, of course, is one of those. Dr. Copper has been in an incredible downtrend for a while now. We spoke about it on this channel, and it fell off super severely all the way back into this 3.3 area. It's overshot, which is pretty normal. This is what we call the excess phase, and it's formed base. In fact, in the live stream and many videos that we've been talking about recently, we've been talking about the base of copper. So far, things are looking pretty good. Great movement here as of the time of this recording. We started making down, we breached it, and then we started finding nice rallies. Great buy entry zones in here, really strong kind of price action. And next stop could be for copper, 3.55. Remember, we saw the rotation going on in terms of what was occurring in the metals in the last couple of days in the markets. And it's important to know this rotation is there. Metals coming back in. Another one is iron ore. Iron ore has been very, very turbulent. You can see during 2020 what happened with iron ore. It fell off. It then rallied again to 160. And at this stage, what have we been seeing? Well, a very nice trend line that I've used and we've held up for a long time here, all the way back from 2015-16. So this trend line has just been hit. Similar to copper, all these metals seem to be basing to a degree. And this has forced many traders to go into some of the metals trades. I mean, here's XME. You can see it on the chart. This is the sector for metals. Look at this. Big level, nice wicks, nice rotation so far in this trade. So look outside the box. Often when everyone else hates something, that's sometimes where it's best to buy it. Of course, there's that old Warren Buffett saying. Of course, it's not a suggestion that you do, but you can always bring these things onto your charts and use your own systems and come up with your own conclusions. Let's talk about gold. Well, the level for the brave of heart has held so far. Massive level for gold. Investors would have liked this zone. It's just a very, very good level, and we've discussed it at some length over the last couple of weeks. Have we seen enough to show us that gold is getting rotation into it? Well, let's look at it on the smaller time frames. It's starting to look much, much better. And what I mean by that is things have changed. We've just been in this kind of constant downward trend recently. Then all of a sudden we snapped that downward trend by breaching the last peak. We've pulled back a bit, pretty normal. And maybe we'll even pull back further into the 1700. But notice there were buyers here right around 1700 before. If the market does go down to this level, this could be a good turnaround location to be looking for those buy kind of opportunities. Where we're out of the woods, somewhere around 1750. If this gets breached up here, then probably you can tell the bigger players are in it. So you're trying to counter trend right now, but you're doing so at a smart level. You're obviously seeing the smaller time frames changing towards the upside. And what we need to do now is look for money flow. And right now we don't have the money flow coming in, but if we do, I'll report it here on the channel. And of course, subscribe for that type of stuff. We will look at the big Wall Street money flow coming back into a pair. August is strong for gold. I haven't lost faith in it. I just think this is the right kind of zone or area for buyers to come back in and show some commitment. Let's talk about oil. It just won't go underneath. Oil is on the big level. And of course, we've discussed here at great length the series of lower highs that have been coming through. Now, for oil traders, it's going to be tough. I mean, if you want to trade the small time frames, you've got to look in here. And of course, we have a little box for you. And basically, you're looking towards oil going up and breaching this zone. If it does so, then there could be some buyers on the commitment on the small time frames. If you're trading oil at the moment, most of it looks weak, but a breach of this high here and then possible pullbacks may be met by at least some technical demand at this stage. And this seems to be kind of the level where it's all important. If you're feeling bearish, you really just want a new low. Once a new low forms, most rallies will be shorted off. At least that's what the technicals will be telling you. And we get through one of the key demand zones that's been sitting here for oil for so long. But look, if metals go long, if we get iron ore, usually commodities such as oil will also be going up at the same time. Let's move over to Tesla. Tesla's had a great run on it recently. We had the earnings and there's left a big gap over here, which may need to be filled. I think Tesla's just going to trade in the direction of the market. If the market ends up finding buyers, let's say off Microsoft and Google's earnings announcements or Amazon or Apple later on in the week, you might see Tesla start to ramp some more. So it's just having a bit of a cooler after what was an exceptional breakout. And that was a significant move. From down here to here is 13%. Nothing to sneeze at. Didn't quite get the gap fill, which you'll notice is here. So the gap of the previous left price. But we are kind of just pulling down. There's nothing to be concerned about unless you're kind of breaching past really this gap. Anywhere between 750 and 762. If you're not already in the trade, possibly you're being patient and waiting for turnaround stories. We haven't seen one yet on Tesla. Apple ahead of earnings hit the downward trend. So basically this is the very solid trend line. Remember, when you're drawing trend lines, there's trend lines and then there's trend lines. This is a super solid one, designed and created over a very long period of time. When you're doing it, you need to be also treating it with horizontals. Do you have any reason? Well, we can see that the market was finding support, breached, came up, tested, and sold off. So it's clear that this 155, 156 is a bit of resistance. I wouldn't be surprised at all to see potential even of downward and then upward for Apple, but most likely just some kind of consolidation ideally ahead of the earnings. We'll have to find out again how Google and Microsoft end up reporting. The DAX, and we'll move on to the indices now, is where things get super interesting. I love this chart very much, and the reason why is check out these rejections. 1, 2, 3, 4, 5, and 6. Wow. That's a lot of rejections off a key point. It makes you think maybe 13,400 is important. If you're feeling bullish on indices right now, imagine if the DAX did break through here and then close. The close is probably going to be the key on this one. It'd be significant, and you would have to think that buyers are coming back in. Filling the gap seems like the next logical conclusion, and possibly even a sustained rally for a little period of time. So many rejections, so many orders placed here. If you take out the high, then you're probably really starting to think about squeezing those positions. Now, of course, conversely to that, if we end up getting a new low, most likely sellers are getting commitment, and then that could easily fall back down to 12.6. So there's a case for both the bulls and the bears, the new low or the new high. I would certainly love to see the new high, though. I just think that would be super good, and what a squeeze that could be. IWM over here, 180. Not much to say about the smaller caps. They've been recovering now for a little while. I always like to look at small caps during recessions and during potential recessions, because when the market freaks out, small caps can often show us the way. At this point, you'd have to think the small caps are still in the bull trend and still intact on the kind of medium time frames. Move over to the Nasdaq. It's come down to a pretty key point. If you were drawing like a horizontal rectangle here, like a little rectangle, you would have to say that this is a area of interest. Basically, the markets have fallen down previous resistances. Is there a level potentially here for some support buying? Well, certainly there could be, and this is that kind of zone where many traders will be looking for turnarounds. I wouldn't say it's a good point just to say, oh yeah, I'm going to buy, but if you have your systems and you have them in place, it's certainly an area of interest in these markets. Move over to the SP 500. As we mentioned in the intro to this video, 20 moving average mean reversion is long overdue. We haven't touched it in many months now. And usually this is what happens. You kind of find that the market on the way up comes back to the 20 moving average. It's one of our favorites. And on the way down, it can come back to mean reversion. R1 pivots can be really used and quite helpful for finding out resistances or finding out key levels. You can see over here, it was used pretty effectively. So we've got an R1 pivot and a 20 moving average plus a previous resistance. Would that be a great zone for sellers to come back in? Well, there's real potential there. Let's have a look at the smaller timeframes, and we'll look at the futures market action here. So basically, we're still making a series of higher lows. If you want to put a trend line behind it, you'd have something like that. And I'm sure many daily traders will have something like this put in their charts. A lot of people are mentioning, could this be a head and shoulders, left shoulder, head, right shoulder? Yeah, it certainly could be. Breach through this. All of a sudden you're looking towards the downside. Again, earnings is most likely going to be the cause here. And I'm looking specifically at 39.20. That will really change the trend on many of the larger timeframes. That is more like the 1 hour, 2 hour, 4 hour, etc. That's where you'll get that kind of bigger change occurring. And this is going to be important because, of course, that's where you think the significant money is in, and you're probably going to see rallies met by sell demand. Most likely Microsoft and Google would be the ones forcing that through. So the next 24 hours are pivotal. We've got kind of like a trend line coming up here. We've got a horizontal area around 39.20. So one of the most important things over the next 24 hours is going to be watching something like this trend line. If we end up making a new low during the earnings and then bounced it back off, many people would consider that a spring style entry. And if the spring happens and then we breach through this 39.75 zone, that's where you're going to see that further continuation in these markets. So yeah, I'm really interested to see how this earnings plays out. Possibly leading into the earnings, we won't have much. But remember, this is the week of news. So there's just so much news coming out. We've got the FOMC, the Fed rate, the big earnings. It's just all happening. Bitcoin is not happy with what's occurred so far. The downward trend line or the upward trend line has been breached. It's come down. It's come down again. It's trading around 21K. I mean, you would only say this has bearish kind of action on it at the moment. There's no bulls coming back in just yet on the price action. We'll continue to update that as the story happens, but nothing yet. If you haven't already, come and follow us at Discord. We've got over 10,000 people in there. If you're interested in the private trading community, we do have one. Links in the description. And of course, follow us over at FX Evolution on Twitter. We always post a whole bunch of stuff there. Well, not only do we have big earnings, but we also have a huge amount of news coming out. We've got consumer confidence, 10 a.m. New York time. We scroll down and then the Wednesday here, FOMC statement, the funds rate, and of course the press conference. Expect that to be a highly volatile event. Then we get into advanced GDP on the Thursday, along with the Apple and Amazon earnings. And I mean, it just doesn't get any bigger. You've got core PCI price index. Many traders will potentially sit back and relax for this type of week. They'll wait for the right opportunity. And in many ways, that could be the big thing. Prediction here is going to be tough. If you're trying to predict a market and before it happens, there are so many variables. Sometimes there are only a few variables. This week, there are so many. Good luck, everybody. Thanks for subscribing, and thanks for getting us close to 100K. We're almost there, and that's thanks to each and every one of you. So if you enjoy the content, remember to subscribe, and of course, smash that like button. Also, if you're interested in anything that Tiger Brokers can offer you as a trader and investor, please look at the description, links down below. There's a whole bunch of special offers that they have right now. See you soon, guys. Bye.